Imagine working your entire life believing one simple promise. You wake up early, you go to work, you pay your taxes. Every month, national insurance disappears from your paycheck. Not optional, mandatory. The government tells you it is the price of security, the price of dignity in old age. You sacrifice things along the way. You skip expensive holidays. You delay buying the new car. You focus on one goal that your parents told you was the foundation of financial security: owning your own home. You buy a modest house. You spend 30 years paying down the mortgage, month after month, year after year. Finally, the day comes. The mortgage is gone. The house is yours. No landlord, no rent, just security. Now imagine waking up on your 67th birthday. You walk to the door and pick up the letter from the Department for Work and Pensions. You open it expecting confirmation of your state pension, the safety net you paid into since you were 18 years old. The system you trusted for nearly 5 decades, but the letter doesn't say £221 per week. It doesn't say approved. It says something else. It says your entitlement has been reduced. Or worse, it says zero. Why? Because you own your own home. Because the house you spent 30 years paying off is now considered wealth. Because under the new proposals being quietly discussed in Westminster, a property ownership could disqualify you from receiving the very pension you spent your entire working life funding. Welcome to the new era of means testing. The rumours coming out of Westminster are no longer just rumours. The Treasury is staring at a massive hole in the public finances, an ageing population, fewer workers, more retirees, and a state pension system that is becoming increasingly expensive to sustain. The solution they are now openly discussing is something that would have been politically unthinkable just a few years ago. Means testing the state pension based on wealth. They are calling it targeted support. They are calling it fairness. But let's call it what it really is: a punishment for saving, a tax on responsibility, and potentially the biggest rug pull in the history of the British welfare state. In this video, I'm going to break down exactly why homeowners are now in the crosshairs. I'm going to explain why owning your home could soon become a liability in the eyes of the state. And most importantly, I'm going to show you the financial strategies many experts are already discussing to protect themselves before the rules change. But before we go any further, I need to ask you for a massive favor. This channel is one of the few places actually talking about these policy discussions openly. And the reality is that the algorithm only pushes these videos if viewers engage with them. Right now, a huge percentage of people watching are not subscribed. So if you believe you have a right to the pension you paid for, take 2 seconds right now. Click subscribe. Turn on the bell. It costs you nothing, but it helps this information reach more people before the rules are quietly rewritten. Done it? Good. Let's talk about the trap. Most people still believe that the state pension works like a savings account. You pay into national insurance your entire career. Then when you retire, you simply receive the money back. A fair exchange, a contract between citizen and state. But this has never been how the system actually works. There is no personal pot with your name on it. There is no vault somewhere in London holding your contributions. The money you pay today is used immediately to pay the pensions of today's retirees. Your contributions are not saved for you. They are spent instantly. The entire system depends on a delicate balance, enough young workers paying in, enough retirees receiving benefits. But that balance is collapsing. In the 1950s, there were multiple workers supporting every pensioner. The system functioned easily. Today, that ratio is shrinking dramatically. Fewer births, longer life expectancy, more people retiring and drawing pensions for decades. The mathematics are becoming uncomfortable, and when the numbers stop working, governments face 2 choices: raise taxes dramatically, or reduce what they promise to pay. Means testing is the political compromise. Instead of removing the pension entirely, they simply restrict who qualifies for it. And this is where homeowners suddenly become the target. On paper, the proposal sounds simple if someone is extremely wealthy. and perhaps they should not receive the same pension as someone struggling financially. That argument polls well. It sounds reasonable. But the definition of wealth is where things become dangerous. Because for most people in Britain, their biggest asset is not cash in the bank. It is their house. You might have bought your home decades ago for £80,000, a normal semi-detached house in an ordinary neighbourhood. Nothing luxurious, nothing extravagant. Today, that same house might be worth £500,000 or £600,000 or more. You don't feel rich. Your lifestyle hasn't changed. You still watch your bills. You still shop carefully. But according to the government's balance sheet, you are now an asset owner. And if means testing includes property wealth, that alone could push millions of retirees above the threshold. Suddenly, the house you thought guaranteed your security becomes the very reason you lose your pension. Think about the consequences for a moment. A retired couple living in a house valued at £600,000 might technically appear wealthy on paper, but if their actual income is limited, removing their £11,500 state pension dramatically changes their financial reality. How do they pay rising energy bills? How do they cover council tax? How do they maintain the home they spent decades paying for? This is where the second part of the trap appears. Downsizing. If your house is considered wealth, the government's logic becomes simple. Sell it. Unlock the equity. Use the money to fund your retirement instead of relying on taxpayers. From a Treasury perspective, the argument is clear. Britain has a housing shortage. Millions of younger workers are locked out of the property market. Meanwhile, many older homeowners occupy large family homes, cut the pension, encourage downsizing, free up housing supply. But for the individuals affected, the reality is brutal. It means selling the family home, the place where your children grew up, the place where decades of memories live. Not because you want to move, but because the financial rules forced your hand. And if selling the home isn't an option, there is another solution the financial industry loves to promote. Equity release. Borrow against your house. Receive income. Stay in the property. But those loans accumulate interest over time, slowly eating away at the value of the home you hoped to leave to your children. Instead of passing wealth to the next generation, it gradually transfers to the banking system. A quiet redistribution of middle-class wealth. And the enforcement mechanisms already exist. Land Registry records every property. HMRC already knows your financial assets. Connecting those databases is not difficult. A simple digital assessment could instantly determine whether your total wealth exceeds the pension threshold. Which means the entire debate now comes down to one question. Will voters accept this? Politically, the government believes they might. Because the generational divide is widening. Younger workers struggling with rent and rising living costs increasingly question why their taxes fund pensions for homeowners sitting on valuable property. And politicians understand this narrative very well. Frame it as fairness. Frame it as intergenerational balance. And suddenly the policy becomes easier to sell. But that doesn't change the fundamental issue. For decades, citizens were told the rules were simple. Work, pay national insurance, receive a pension. Now the goalposts appear to be moving. So what can people actually do? The uncomfortable truth is that many financial planners are already discussing strategies quietly. And some people are exploring early inheritance, transferring assets to children years before retirement. Others are restructuring savings into pension vehicles that might be treated differently under means testing rules. Some are even questioning the logic of accumulating large assets at all if those assets eventually disqualify them from support. These conversations are happening more frequently behind closed doors, because once legislation is introduced, the window for planning becomes much smaller. This is why the debate happening right now matters so much. Governments rarely introduce sweeping changes overnight. They test the reaction first. Policy papers, trial balloons in the press, quiet discussions inside Treasury committees. They watch the public response. If the reaction is silence, the policy moves forward. If the reaction is outrage, politicians often retreat. So the next few years could determine the future of the state pension itself. For younger viewers watching this, the message is even simpler. Never assume the state pension will exist in its current form when you retire. Plan your finances as if it may not, because the era of guaranteed benefits funded by an ever-growing workforce may already be ending. For those approaching retirement, the conversation becomes more urgent. Review your assets and understand how policy changes could affect you, and most importantly, stay informed about the direction these proposals are heading, because once the rules change, reversing them becomes extremely difficult. Now I want to hear from you. If the government introduced means testing for the state pension based on home ownership, do you think it would be fair? Or would it break the promise millions of people relied on for decades? Let me know in the comments. And if this video helped you understand what could be coming next, share it. Send it to your family. Send it to friends who are approaching retirement. Because most people have no idea this debate is even happening. Subscribe if you want to stay ahead of these policy changes. We are going to continue tracking every development as this story unfolds. Protect your wealth. Protect your future. And don't let the rules change without knowing exactly what is at stake. I'll see you in the next one.